The retail industry has already been through a massive amount of tumult over the last few years, in particular this last year, a super big crash course in e-commerce if you weren't there already.
Right.
How transformative is this year going to have to be?
Well, I think we've really laid the foundations of that for 2021 during this sort of COVID impacted year. And for us, what we delivered in the third quarter was our second consecutive quarter of comp growth of sales, EBITDA and margin. So overall sales declined, but remembering we sold off banners, we've sold 5 companies this year and restructured our store model base. And in doing so, our comp becomes our new comparison. So when we look at 5% comps in our Bed Bath & Beyond banner, and in that banner alone, 94% growth in digital, you see where that's being fueled and some real strength there and muscles that we've built for 2021 and beyond.
Mark, how different will people's spending patterns be once we start to see the virus being pushed into the background, once vaccinations start to have an effect, and once the weather starts to improve as well? Do people start spending money on different things?
Look, we're seeing some early patterns where home is really settled in as a core need and a core desire of our customer base and the general populace. We look at things like Pinterest pins that show 3 and 6 months out what customers are needing and forecasting, and still very heavily around moments of joy, moments of home, moments of family celebration moments, and really getting back to the new normal. So we see things like weddings coming back into place, and we have in one of the highest registry sets in the country, and we really see that as a future strength as we come into 2021.
Okay, so let's get back to the retail world, Mark. How much have you already adapted your business for these changes? And how do you then do it even more this year? Is it more hiring on the e-commerce front? Do you need to rethink how you do your actual brick and mortar stores? Where are you in that?
Yeah, look, we pivoted to really strong investments during 2020 as part of our plan, and COVID has definitely accelerated those actions and outcomes. So for us, you really saw a company that wasn't truly focused on digital, and if it was a separate company. Moving to an omni-always perspective, investing in both channels equally has really been one of the keys to our stability and success. So the introduction of BOPUS, same-day delivery and shipping from store, where we're using the strength of the store vehicle to really support an omni-channel customer. We've invested in the talent and the team. You see that through our website. You see that through our sales. We've got higher conversion levels of app downloads. So we've built the muscles that have been incredibly substantial, but we think are also sustainable to fuel our growth in 2021 and beyond.
Mark, does that make the business, how much more efficient is the business as a result of this? How much better are you at managing inventory as a result of this more integrated approach, bringing digital in? And what does that mean in terms of working capital?
Yeah, look, it's a great question. We've already reduced our overall inventories in the end of this quarter by 30%. So, we've reduced our debt and reduced inventory. So working capital has been increased, and we see that being able to use an omni-channel environment of inventory, whether in DC or store, to facilitate customers' orders is not only great for the customer, so it creates immediacy, speed, and convenience, but also brings down our overall inventory. And we're also investing $250 million over the next 3 years in our supply chain to further speed up the movement, flow, and distribution of inventory to really bring down working capital and make us more efficient.
Shipping and freight costs have also been rising, obviously, with e-commerce. That's a given, shipping costs, et cetera. You also do a lot of coupons. My inbox will tell me that. How do you stay profitable? How do you manage these kind of cost increases?
Yeah, well, you saw both from the second and third quarter, we had triple-digit increases in our gross margin rates, despite high digital penetration, as well as increase in shipping costs in that last part of the third quarter. And we also really reduced the amount of promotions. Firstly, on promotions and coupons overall, we weren't using them very strategically, and there was a lot of waste, and we've been able to really hone down through data and analytics and customer insights the way to maximize our promotions, and that's generating better gross margin that we can put back into everyday price, but also to the bottom line. So we're really generating a high level of profit. And then we look at our 2021 beyond plans, we actually have a number of levers, including negotiations that we've held with suppliers to help us with our base costs, the introduction of own brand, which is at a higher margin rate, and this kind of cleaner version of distribution of goods. 36% of all our digital orders in Q3 were managed by stores. So this reduces your overall costs, will more than offset any shipping cost benefits, detriments in 2021.
Mark, if we see bigger stimulus checks, if we see consumers becoming more relaxed about their future and therefore more willing to spend what is a relatively high savings rate at the moment, are we going to get a demand shock this year, and are you ready for it?
We're definitely ready for it. I think we will see, particularly in the home space, which has built equity in 2020, we see moving forward for the next couple of years, we see that the customer will be more free-flowing. We saw that last year, and we look forward to it this year. We're ready. Although our inventory is reduced, we now have a higher quality of inventory. We've eliminated a lot of waste and aged inventory, and we have our new own brand programs and opening price point programs coming into our assortment in 2021. So our curation and our inventory levels of quality will really ensure that we're ready to meet any of those demands. We're excited about that.
Hey, Mark, you going to hire this year?
Yeah, we will. I mean, I think what we've got is this year, last year we were very, very cautious. Obviously, we had furlough for our stores because we were one of the stores that was closed during the key COVID period. As our sales increase, we'll act accordingly, of course. We will look forward to that.